step number one is I would go to a website called Opt Out Prescreen, OPTOUTPRESCREEN.com. And I would elect to opt out of any soft offers for the next 5 years, the electronic version. Now, don't fret, don't worry. After you've gotten into your home, if you like, you can go back and reverse that process. But I found that it can help you increase your scores. So that's step number one. Stay tuned for two. Now that you've taken care of the opt-out pre-screen step, the second most important step that I would take is go to myfreeannualcreditreport.com. That's myfreeannualcreditreport.com. That's the only government-sponsored entity that is established for you to get a free look at your credit reports from all three agencies, Experian, TransUnion, and Equifax. So I would go there, I would download those three reports and look for any anomalies, any inaccuracies, anything, any gotchas, if you will, so that I know how to answer those questions when my lender asks about them, because they will be asking. So that's step number two. Stay tuned or watch the next video to get your next step. For step three in this process, I really had to think about it and what I would do, being someone that's in the industry. But that third step, I would actually start gathering my documentation. And believe me, even myself, someone in the industry, that's something I don't even like to do, but it's a part of the process. So what documentation do you need to gather? It's an excellent question, and it's really specific to your needs. And that's something that the lender that you choose, the one that you know, like, and trust, should be able to provide a checklist for you. But from a 10,000-foot view, I would start gathering income, taxes, asset documents, bank statements, right? My identity documentation. I would start mentally and physically putting my hands on those things so that I can prepare for the next step. This next step in the process is something that I do every time I purchase a home, is that I will create a branded specific email address for whoever is going to be on the application. In my whole household, typically it's either myself and or my wife. We never rarely go jointly. But that said, I would create a branded email for that specific transaction because I can get a free online storage location either from Gmail or Outlook. And so that cloud storage location is key because now I can start transitioning those documents that I've gathered and putting them into separate folders online so that they're readily available for when I get ready to submit my applications, plural. Now that I've created my online presence, storage locker, if you will, and I've gathered the documents and I have my credit report, right? It's very key at this point in the process to take a little time, take a step back and analyze these documents. I want to look over my bank statements, okay? I want to look over my tax statements and or corresponding W-2s, things of that nature. I want to take time to review all the documents, my pay stubs, to make sure that they're complete, no pages are missing, and possibly for any anomalies, any gotchas that might come back to bite me. So the next video in this series is more in depth as to what you should be looking for in these items prior to you submitting your application with your lender. Now you're in the part of the process where you're ready to submit your application, or shuns, if that's a word, plural, at this point. A word of caution, you should not submit to more than 3, to be honest with you. You should have been able to pare those things, those lenders down at this point. And it's okay if you only want to submit to 1. But remember, it's your choice, it's your option to shop. And if you follow these steps, I've prepared you to be able to do so, because that's why most people don't shop, because they don't want to go through the hassle of providing the documents. So if you follow the steps prior, you're ready to submit to the lender that you know like, and trust so that you can find out how much home you can go out and shop for with your realtor partner. Congratulations. I told you that now that you've done the heavy lifting up front, you're probably feeling good. You've gotten your approval. Hopefully it's a pre-approval, right? A fully underwritten approval because you've had all the documents and everything submitted to your lender. You've been able to work through any letters of explanations or anything that the lender needed to have addressed at this point. And now you have that pre-approval letter, and you probably have some type of a fee sheet or loan estimate. So the last video in this series will show you the places that you need to look for so you can compare apples to apples when you're shopping lenders, and so that ultimately you could pick the partner that is best for you and your situation. You're going to be looking at closing costs when it comes to a loan estimate, and those are fees associated with finalizing the purchase of said home that you're looking to buy. You're going to be looking at estimated monthly payments, another very important and key part of buying homes. And lastly, you're going to be looking at the interest rate, and in some cases, the APR, the annual percentage rate. These are the places in which you can compare and contrast to make sure you're getting the best deal for you and your family. One key place starts with identifying what lender you are going to request the numbers from, okay? You have different types of lenders. You have traditional banks, Wells Fargo, Bank of America, Chase. These are our big monolithic banks. You have mortgage companies like myself, or mortgage banks, where we specialize in the mortgage function from start to finish to help you as a potential home buyer. Also, you have mortgage brokers. The concept is we have relationship with several different investors, people that lend money to you, potential home buyer, to help you get into a home. And we shop to get you the best deal. And then lastly, you have your credit unions. So these are 4 separate entities in which you could potentially reach out to ask for a loan estimate. Now, how are we going to reach out to these lenders? I would say the best way to convey the request would be via email, so that you could gather those emails into one place. With all of these email systems that we have now, even the free ones, you can set up a folder, you can set up some type of rule, so when that information's coming in that's related to this process of you buying a home, you're not inundated. You don't have a bunch of junk in your inbox. You can automate how this information comes into you so that you're able to attain it readily and be able to make the decisions that you need to make. Second form of communication to me would be via text. So you want some type of documentation where you could go back and review what it is, put side by side what these folks are saying so that you can make a decision. This is strategic by doing it this way because you'll be able to tell a lot of things, not just interest rate and loan program, but customer service, meaning how do these folks respond? Now you should have received your loan estimates. This is a very important step when it comes to communication and how quickly and completely your potential lender gets back with you. Those are things that you want to pay attention to. Obviously, you're going to be looking at your interest rate. Is it fixed? Is it variable? Your loan terms, right? As far as the duration is concerned, the monthly payment, the closing costs, any additional fees. It'll look something like this. This is a loan estimate. If you are not locking in your loan at the time that this estimate is given to you, you have to realize that this is just an estimate. And as I highlighted this area here, if your interest rate is being locked, that would mean that you've done an application, you've gone through the pre-approval process, and in most lenders are going to lock you in when they know that you have a house in mind, because everything is time sensitive. If not, it tells you before your closing, your interest rate and all these fees can change. And you may be asking why. And the reason why is because we don't have a house yet. We don't know how to have a house. So the goal of this exercise is, number one, am I picking the right partner based upon how I like to be communicated with and how accurately and promptly do they respond. Don't just focus on the interest rate, okay? What you also want to focus on when it comes to a loan estimate, in my professional opinion, really is on page 2 of the loan estimate. And this is your Section A fees, your lender fees. Because this section is really the only section we as lenders can guarantee at this point in time. Okay, this is the section that is going to outline, okay, what the lender's fees are, regardless of how many different lines they've itemized them in. And I think that's a good practice to itemize fees. You might have some people say, well, oh, we don't have Section A fees. Yeah, they do. It's baked in their interest rate. Okay, so that's the difference why some people's interest rates are higher than others, because the freer it seems, the more it costs, right? So that's where you want to understand the difference between interest rates and APRs, because an annual percentage rate is the calculation that comes up to show you that there's a cost of you getting this credit based upon an annual rate. So if the interest rate and the APR are different, that's where your cost is. So Section A fees are what the lender controls, less discount points. Okay, when we talk about discount points, that's when you're buying the rate down. Okay, what is a discount point or a point? A point is, those are fees, monies that are paid up front that we pay to the end investor, where you say, hey, I want to give extra money to buy my rate down, okay, because I want a lower rate. That money doesn't come into my pocket. That's for you to buy the rate down, and that's a cost. It may not be a good idea to do it. It may be a good idea to do it. Again, this is why you're going through this process to choose the lender that you know, like, and trust to be able to explain these concepts to you and make it make sense to your specific situation. So when it comes to the loan estimate, Section A fees are really the only fees that the lender could hang their hat on, unless you have a contract. And if you've had a contract and you've applied with that lender, then by law, 3 days from you giving me that receipted contract, I have to disclose to you your initial disclosures, and you will get a official loan estimate. So now the lender or lenders have responded, and you've received however many loan estimates based upon that one specific scenario that you sent out. They've sent them back. Now what you want to do is you want to take time and review the loan estimates and compile your questions. Your questions should be specific to the loan estimate that pertains to the lender's cost, the Section A fees on page 2. Is my rate locked in or is it still floating? That's a good question. Explain that to me. Are there program-specific fees? A lot of down payment assistance programs have additional cost. What are those costs? Highlight those for me. Because if I'm comparing apples to apples, then each lender should know what those costs are. And if they don't, that should tell you if you want to deal with that person or not. The questions should be questions for the lender to clarify what's on the loan estimate. And again, most of us have been trained just to look at the interest rate. I want you to look at more than that. I want you to look at the response. Some things, some premium services cost a little more, but you're going to be able to get from point A to point Z in a more efficient, less stress-free. Now it's decision time. You've got everything in, you've gone through the steps, and now you're reviewing these estimates and you're comparing them side by side based upon the same property, the same loan type, the same program type on the same day. And so you want to look for the overall best deal that deals with your specific financial situation. And that might not always be the lowest cost. Just keep that in mind. In conclusion, guys, requesting a loan estimate is a vital step in the home buying process. And it's a step that more of us that are first generation financial literate need to become more and more comfortable with, and especially teaching those that are coming behind us so that we can know how to shop and do it properly. And so by following these outlined steps, and carefully evaluating the estimates provided by the different lender or different types of lenders, you can ensure to make an informed decision that aligns with your financial goals. But remember this, the right loan can significantly impact your overall home buying experience. So take the time to do your research and choose wisely, because certain things that we do are left brain function and others are right brain. When we put them together, we use our whole brain to make the best decisions. There you have it. If you like content like this, don't forget to share it with somebody. Leave a comment. Most importantly, be good to one another. Let grace abound. Peace.